Hi everyone. Just a moment ago, I heard the rodeo clown Kramer talking to all the quote unquote home gamers, whatever the devil that means, and saying that the markets are broken on the way down. Just on the way down now. That there's something about these ETFs that when they're selling off and they're selling off hard, they're somehow broken. And that the next time, because it's happened twice now, when the markets sell off real hard like that, what you need to do is just a knee-jerk reaction, is just step in there and buy the market, because the next day you can count on the market going up. I'm Bagged On at StockMarketCaddy.com. It's March 26th at 7:30. Kramer is full of horsepucky. Okay, the markets are not broken. The markets are what they are. But I will say this: they have been bastardized. They have been manipulated. They have, in some respects, been nationalized. The markets at one time, and this may have been many decades ago, was actually a mechanism of price discovery. That mechanism, going back to at least 2008, but probably even before that, has been destroyed, manipulated out of existence. They don't want, when I say they, I'm talking the financial industry, I'm talking the Federal Reserve, I'm talking the large money center banks, I'm talking about the monopolistic companies. They don't want their shares being traded really freely and the free price discovery taking place amongst millions and millions of people. The problem with such a price discovery, it can hold companies accountable, it can hold industries accountable, it can hold governments accountable. And that's not a good thing to them. I think it's a good thing, but we don't have it, and we haven't had it. And let me explain something to you. You're looking at what we call the swing machine. These are futures markets. The VIX, the Russell, the S&P, the NQ, NASDAQ, the YM. But let me show you further down. We got the British pound, the US dollar, the euro dollar, the Japanese yen, gold, silver, copper, oil, heating oil, natural gas, soybean meal, soy, 10-year bond, 30-year bond, cocoa, cotton, coffee, oats. You're saying, what in the world are those things? These things are called commodities. Commodities. They don't have management. They don't really have employees. As an industry, they might, but they're a commodity. And how do you trade, commodities? You must trade them technically. It's based on money flow. So let me show you something. Here's a consolidated view of the ETFs that Kramer is crying about. The SPY on a daily, weekly, monthly, the S&P 500. On top of it, the SPY also is cap weighted, okay, which is another little trick to manipulate the overall price of the index to make it always basically go up. Because see, these are also rebalanced. These ETFs are rebalanced each year. But you got something called the diamonds and the QQQs and the IWMs. Many of you are probably familiar with that. Then you have the currency ETFs. Then you have gold, and you have a silver ETF, and you have copper. But look at this. We got the financial ETFs. We got consumer discretionary. We got technology. We got biotechs, industrials, energy, building materials, healthcare, utilities, consumer staples, retail holders, information technology, real estate, regional banks, transportation. Folks, the majority of these ETFs that comprise many various baskets of stocks did not exist prior to 2005, 2008 timeframe. They weren't there. It's my contention that the financial industry, in conjunction with their overseer, the Federal Reserve and the central bank, created these ETFs. Why? So they could quickly deploy money, assets, and manipulate the markets. Move them one way, move them this way. I've done videos before speaking to whether or not markets have been weaponized. Notice sometimes markets will go down, create a real crisis attitude just before an important political vote. But these ETFs just deploy. Money is put into the ETF and then money is deployed into, and many times there's redundancy, just into blindly Amazon, Netflix. So if somebody takes their entire 401k, or better yet, a big money center bank deploys money into the XLK, money will go into quite possibly, or go into Nvidia and Cisco and Intel. It'll just plow in there with no consideration for what those companies are doing, on a given day or a given time period. Has very little to do with the earnings, has very little to do with what the management is doing, has very little to do with anything. The money flows in, it flows across, it flows out. And that's all a wonderful thing and can lead to very low volatility and a rising basis of prices, and everybody can be fat and happy until there's a breakdown, until the markets are reaching their saturation point, and then we're going to have periods of volatility. And what happens? The money comes flowing out of these ETFs, and then indiscriminately money will flow out of the stocks. Now, maybe out of some of the bad stocks it should come out of, but it comes out of the good stocks as well. The price discovery mechanism has been deliberately destroyed. The markets have been commoditized. So all of the crap that you've been taught over the years about price to earnings ratios and the importance of management, I'd even go so far as to say the importance of earnings themselves, don't matter. Now, I don't think it's a good thing. I think it's a bad thing. But it's here now. And it's probably here to stay. So that's what you're going to continue to hear from folks like the Rodeo clown. When the major sell-offs come down, they're going to tell you they're broken. And then when they go raging up like they did today, of course, no, that's not broken. That's people really thinking over that, Netflix, $300 a share for Netflix at 250 times earnings was just too cheap and we got to drive it up to 320. That's nonsense. There is no price discovery. It's been commoditized. And that's the way commodities who don't, have earnings in and of themselves have traded technically. But we're in this situation where the markets, yes, they've been commoditized, but the media doesn't want to tell you the truth. And no one is teaching you how to trade these markets technically. You better learn, because it's not going away, and it's only going to get worse. I'm Bag of Don at StockMarketCaddy.com. Once again, if you enjoy our videos, thank you for the follow, like it. But remember, we can only produce so many public videos because we're working 80 hours a week for our members. And they get this type of education and much, much more each and every day. I'm Bagadon, stockmarketcaddy.com.